Hi everyone, welcome back to Paisa Bolta. It's a Sunday, I think. I don't know which day of the week this video will be released on. What do you think?
Sunday.
What do you think it will release?
Sunday confirm it will get released.
Sunday it will get confirmed. No? So if you manage to land this on a Sunday, please give us a thumbs up and give some comments about how Keshav is looking today.
Yes.
I think he's looking rather smashing. What do you say, Keshav?
Yes, sir. Sir, I didn't get that properly, sir. But we can go to the content, sir.
So be it. Keshav has said, move on, enough jokes. So Keshav, lots of us have been wondering.
Okay, sir.
As Indians, we've been encouraged to look at US stock market as an investment.
Yeah, sir.
To diversify. Correct?
Yeah, sir. Because
that is fantastic. But a lot of us cannot do Indian company itself. We are finding it very hard to do analysis.
Yes.
So American companies, it's next to impossible for us to do analysis. So the next best option for us buying American stocks is to buy sector-wise on ETFs, right? What are ETFs?
Exchange traded funds, sir.
Yeah. So I thought we will discuss today.
Okay, sir.
And you can give advice to our audience on what kind of ETFs.
Me?
Yeah.
Yeah, sir. We'll give, sir.
Hey, it's easy, man.
Yeah, sir. Yeah, sir. We'll give, sir.
It's logical.
Yeah,
I
sir.
want them to understand that it's not so complicated as they think it is.
Okay, sir.
So what is an exchange traded fund?
It consists of equities, sir.
Correct. So you take a bunch of stocks,
Put
Yes.
it all together.
Yeah, you make bhel puri out of it, mix it all together.
That
Then
will be
whoever wants bhel puri,
They will
serve.
get a
You
unit
put
serve.
little,
Ah.
and you serve them.
Yeah, sir.
Correct? One
Yeah.
plate.
Yeah, sir.
Instead of eating the puri alone and eating the save alone,
You can share.
yes, you mix all of it together. Whatever you like. If some people like peanuts, you can put peanuts. Whoever likes peanuts in their bhel puri can have peanut bhel puri.
Okay, sir.
Correct? So that's the basic essence of ETF. Correct?
Yeah, sir.
Understood? You with me?
Yeah, sir. Yeah.
Chalo, very good. So that's the idea here. So you take a sector wise.
Okay, sir.
You pick IT companies or whatever. So this ETF will consist of companies of your selection.
Okay.
Right? So you'll have exposure to those companies or that sector.
Okay.
And that way you can diversify in entering the American market. And this way also you lower your risk. If one company fails also in that ETF, the others
Another
are
company
still,
flourish.
the other ones are there.
No.
So it's good.
Okay, sir.
So it's like picking a tobacco ETF or software ETF. You can pick.
Okay, sir.
So I thought we'll talk about various ETFs which are available. So what would be the first ETF which you'll think of?
Sir,
When you think of American stock market, Anand always talks about this. Which one would that be?
Dow Jones, sir.
Yeah, but it's called the S&P.
500, sir.
Yes, S&P 500 ETF.
Yes, sir.
Okay, or S&P ETF Trust. SPY it's called. Okay, so what is the good things about buying that ETF? It provides you broad exposure to US companies.
Okay.
Generally at a very low cost.
Okay, sir.
The cost of the ETF is very low because it's very much like a passive fund. Okay, it's not a fund, it's not a passive mutual fund, but it's in those lines. So the cost is very low and gives you broad exposure to the American market sectorially.
Okay.
Right?
And Warren Buffett used to invest in this.
Yes. He says this is the index.
Okay,
So
sir.
this is the hardest one to beat because the cost is low for a long period of time because all other guys are taking profit, charging higher expense ratio. This one is lower. So
He chooses this.
He says this one will be hard to beat, and so far it's been true in the long term.
Okay, sir.
But the negatives of this could be it's very sensitive to the US economy conditions. So, recession, potential downturn of the currency, and risk to international investors is that. Because Indian currency and US currency moves like this.
Yeah,
Correct? So, that risk is there. And downturn in the US can also affect the index. So, if you're investing for the long term, you shouldn't have a problem. But if you're trying to do, let's say, short term, like 3 years, 2 years, 1 year,
That may
this
be a
might be a problem. Correct?
Yes.
Then you have sector-specific ETFs. Okay, these are like technology sector ETFs, SPDR funds. Okay, what this allows you to do is allows you to target large exposure to specific sectors of the market, like tech, finance, like what we're talking about. So if you want to be buying Google, Apple, Microsoft, so you'll have one ETF which has. You can search and find one which is like this. Or you can, let's say you want finance. You want the banks, American banks, big banks together. That will be one.
Okay.
Right. But the problem is when you buy something sectorial like this, that sector has a high risk. Okay. There's a high risk of it. You're not diversified enough across enough places to bet. Your bets not placed across the board.
Okay.
You're very sector specific.
Narrow.
Yes.
Understood, sir.
Understood?
Got it, sir.
So what is sector specific? As an example, what can you think of?
Sector specific. It's like, sir, what to say? Narrow path means if we have Pale Puri, Pani Puri, Masala Puri, sir, we are choosing Pale Puri only, not the Masala Puri and Dahi Puri, sir.
Correct.
That is,
Yes.
sir.
So this is a thali.
Yes, sir.
Correct. Thali meal what you have is diversified.
Okay, sir.
Right? You have a bit of sweet karam, everything on your thali plate.
Okay,
You'll start with a roti, then switch over to a rice.
yeah,
Correct?
Sir. Like that.
Yeah, that is diversified.
Okay, sir.
But this is like ordering only one dosa and sitting. If the
Understood,
dosa ma'am that day is not very sour, your dosa won't taste so good. If the chutney was not made with fresh coconut,
It may
then
not taste
definitely you'll be running the runners.
True, sir.
I think I triggered some memory because I think to lose you for a moment there. I think some old memory has come out. Okay, so we spoke about two. We talked about one which is diversified. Then you can pick sector-wise, right?
Specific.
Now there's another one which is the Vanguard Total International Stock ETF. What is this? What do you think that means? Vanguard is a big company.
Yeah, sir.
Right?
Doing
What is Total International Stock? What do you think that could mean?
total international stock.
Yeah.
It means that the companies which do bigger in across the world.
MNCs. That's what he means.
Multinational.
Correct. But he's not talking only about MNCs.
Okay.
He's talking about companies across the world, non-US markets. So it gives you exposure to international markets.
Okay.
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 So we can talk about like Hong Kong Stock Exchange. You'll talk about
Japan
Stock Exchange, European Stock Exchange, British Stock Exchange. So this gives you international exposure. So
Okay.
even more diversified. You're not only stuck to American market. You're looking at the whole globe as a whole. But the problem is you're stuck behind macroeconomic problems. Currency problems. Currency risks are there. Each currency fluctuating. Then when you expose yourself to global geopolitical events like the Russia-Ukraine. Right?
Yeah, sir.
So these could be also territorial within areas also. If China and Taiwan get into a skirmish, that area. So it can be those kind of things can affect your...
Affect that.
Yeah. So we have spoken about three. Now your favorite is there. Bond. Bond ETFs.
Okay, sir. I know,
What?
sir. Something I know, sir.
You
Bond
tell
ETF.
me what bond is.
Sir, bond is something that if there are three types of bond, I think so, sir. Government issued bonds, corporate bonds, and two bonds only I can remember now, sir. That bond means if some companies want to do something, but
They want to borrow money.
they want to borrow money, they
So
issue
you
bonds.
as an investor, you're lending them money and they're paying you interest.
Yeah, sir.
Simple as that. Bond is nothing but somebody wants to borrow money. So you're lending them the money and they're paying you an interest. That is a bond.
Correct, sir.
Understood?
Simple
Bond.
matter, sir.
So you have lots of these bonds which are there. They're all clubbed together, right? And they're sold as ETFs.
Okay.
So you can buy those also, depending on the type of bonds you want to expose yourself. There are high risk bond, low risk bond. So all that is a government bond, like you said. So this is typically is very volatile, but you also get ones which are not less volatile. So it all depends. You have to study the bonds which are there in the ETF.
But this gives nice
Steady
returns.
Yeah, it gives you steady income. What you said is absolutely right.
Okay.
Nice income is what it gives you. It gives you nice income. The bond yields provide you good income, but it has lower return in terms of equity, in terms of it's very interest rate sensitive, and growth of these bonds is not there because bonds are locked in period. Bond trading happens, yes, but bonds per se are not like shares.
Yeah,
You don't own the company. You've only lent money, so your bond capital is there. So you understood?
Yeah, sir.
So we have spoken about
Four things.
four things. Now the fifth one is which one? Since we spoke about income, what else could we be talking about? What other gives income in the stock market?
Things that gives income to the stock market. Mutual funds is there.
When you own a share, what do you get?
Ownership, sir.
Yeah, but what do you get?
When you own a share, what
The
do you
ownership,
get?
that ownership, dividend. There, we came to it. So now you also have Vanguard Dividend Appreciation ETFs.
Okay.
That's another one. Okay, this focuses on companies that have consistent dividend growth and can provide steady income. But the downside is if they're giving you steady income, the company is not reinvesting in itself and keeping the money to grow. So the growth in these companies may not be fast growing compared to the other companies. Growth might be slow.
Slow. Understood,
Because
sir.
they keep giving the money out.
They are not reinvesting in...
Yeah, they're not retaining the cash in the company, helping the company grow, making capital investment, expanding the company, getting to new territories, and all that they're not doing. They're doing good business, they're making profit, and they're giving it away, giving it back to the investors.
Okay, sir.
So as an investor, you will see, but there's no real growth in it. Right? Now, the sixth one, what can it be? We've spoken about stocks, we spoke about bonds. What is the other class of investment which is there?
Stocks, bonds, mutual funds, sir.
That also we spoke.
So we
What
spoke.
are the...
Other things, gold is not an investment.
Yeah, well, it is an investment. It's
Okay,
not a
sir.
great investment.
Okay.
In terms of returns, but it's an investment. And you have commodities. Commodities is like
Commodity
your
market. Okay.
commodity market. So out of the commodity market, you have gold. Gold ETFs are also there. They provide exposure to gold-like commodities and offer diversification. But it does not generate income.
Okay.
There's no dividend. There's no payout in gold. It's only gold, as gold market moves, your income also, your whatever you invested, that will also keep moving.
Understood, sir.
Then you got the exotic stuff like real estate ETFs. Real estate ETFs is exposure to real estate sector. Okay, and potentially income via the real estate. They collect rent and all that. They in turn pay it out as dividends to you. So this company will be holding a lot of real estate, right? And they collect revenue from these real estate.
Okay.
In turn, they give it back to the investor as dividends. But these are very sensitive to interest rate and economic downturns. Like we've been talking,
Yeah, sir.
2025.
It's going to that. That's what I say, sir. Warren Buffett said that S&P 500 is a very risky thing to do. But seeing that on 2025, S&P will get a huge blowback because of this housing crisis.
Because of what's going to happen to the banks. Banks will be left with a lot of bad commercial loans, right?
Yeah, sir.
Banks will be under severe stress. When banks are under severe stress, it leads to economic downturn.
Yes, sir.
Because
They don't
banks stop
trust
doing
each other.
business.
Yeah, with each other.
They don't know who's having bad loan, who's going to go under. They will not be. They'll be scared to lend each other. What happened basically in 2008
Then
on housing
government will
crisis
get-
might happen with commercial real estate is what Buffett is warning about and Charlie is warning about.
Okay, sir.
So that is a possibility. Okay.
Understood.
So as an Indian who's sitting and doing all this, what are the things you should be worried about? You're sitting in India and you're going to be investing in the US. These are the ETFs you're going to be looking at. So what are the risks which are involved in this?
Risk involved this, the change of interest rates.
One, interest rate.
Fed
One. First thing is flows.
dollars.
Correct. Currency risk. Indian rupees and the dollars move like seesaw.
Yeah, sir.
So this can lead to impact in your returns.
Okay.
Your profit. The other is taxation. US has taxation rules. India has taxation rules. So you should understand what are the tax rules in the US. When you're buying it is not a problem. But when you sell it and want to take your money back,
We
you need to make
correctly
sure the
understand
local, whatever US taxes, you meet those requirements. And when you bring the money into India and out of India, those rules and all, you follow and you don't get jammed up.
Okay, sir.
Correct. Then of course, the classic one is time zone difference. When India is awake, US is sleeping. When US is awake, India is
Sleeping.
yeah. So this is there. And there are some fees which are associated. So you have to see the way you look at fees in India will be very different. So there's fees in US. And if you're a US local person, the fees they'll be charging is different. Considering that you're an international trader coming to US and trading, the fees may be different. So you should compare and contrast your fees on various platforms to see, depending on what you want to do. If you're going to be buying and selling often, what is the charges they make? If you're going to be like a value investor, just buying the S&P 500 like Warren Buffett said, and you plan to go there and retire in 20 years, or your son plans to go to college in 10 years, and you plan to give it to your son, then you don't need to worry about the fees so much.
charges.
Yeah, you just want something which is safe and reliable and keep investing.
Yeah.
Because you're not going to be selling. So that is always, you should keep in mind. So keeping all this in mind, you should always consult a financial advisor. You and me are not financial advisors.
Yeah,
are
sir.
we?
We are just saying our opinions.
Yeah, correct. So keep that in mind. Me and Keshav are only sharing our opinion. We wanted to share you broadly what are the options for an Indian when he is looking to diversify and enter the American market. But there's a couple of key things you should keep in mind if you are planning to enter the US market. You should not enter the US market just because everyone says you need to diversify. You should have US market in your portfolio if there's a requirement for you to have US in your portfolio. What are the requirements why you should have US in your portfolio? Okay, so we've done this.
So because as you said, the dollar rate is
No. Why should you be buying American ETFs or American stocks? We've done this.
Yeah, sir. Suddenly not remembering, sir. But I know, sir. I know, sir. Little hint pop out, sir.
You should only go to a store if you have something to buy, right?
Yeah,
If
sir.
you don't have anything to buy, should you walk into a shop?
No, sir.
Correct. So only reason you should be entering the US market is if you're planning to.
Go to US or settle in US.
Correct.
Understood, sir.
So if you're planning to go to the US and settle, if US is there in the future, that you plan to retire and settle down in the US, well and good. Start investing in the US. If you plan to go to educate yourself in the US, you're currently working, you're going to do a master's or plan to go and study further, go ahead and invest in the US. If you have children who are going to go study in the US, you plan to send them to college in the US, invest. It makes sense. Slowly start sending funds across to help them through their education. Or the fourth is, your children are already in the US. When you retire, you plan to go and relocate and live with them there. Then it's a great way to slowly start moving your money and your funds towards that retirement. Other than that, if you are a youngster like Keshav or me, not a youngster, and don't have any aspirations of going to the US and your future right now is in India, I would strongly suggest to stay here for the time being till you have accumulated a huge portfolio within India itself. Then you can look at exploring outside. But if like you and me and Keshav who are sitting here and your portfolio is very small and you're just beginning, like what Keshav just started a few months back opening his account, then you don't need to rush into diversifying just because you hear a lot of YouTubers, you hear a lot of articles, a lot of people talking about it. Please don't feel pressured into investing into the American market. First learn to be here. As they famously say, if you can drive in India, you can drive anywhere. So if you can invest in India and make money in India, Keshav, you can make money anywhere.
Yeah, sir. True, sir. Indian markets are also so risky to do things, sir.
Correct.
So it's good, sir.
Chalo. Alvin is looking at me and wondering am I finished or not.
Yes.
So with this, we shall conclude.
Yeah, sir. Sir, at the end of the video, you said me to give some tips to the audience. So I have something that You can invest on the S&P 500 after the 2025 housing crisis happens. Before that, don't go to S&P 500.
Well, I don't claim to be an astrologer. Keshav seems to be able to see the future.
No,
So Keshav seems to be very well versed
Buffett says
in
that,
studying
so
the planets. I think Chandar has given him the right title of made him, what is it?
Sir, nothing, sir.
Ugly, what?
Sir.
Ugly?
Sir, nothing, sir. Nothing, sir.
No, man. That Samyar.
Nityananda.
Yes.
Kailash.
Keshav is the resident Nityananda in our office. So if anyone has any problems, we all refer to Keshav. And Keshav will
Spiritually.
immediately sort out our issues in the style of Nityananda.
Spiritual. Sir,
Yes.
in the style. No, sir.
Yes.
Not in the style of
He'll take the
Nityananda, sir.
biology of the chemistry of the physics and he'll make it into a financial chop suey and he'll feed it to us. I'm sure Chandra would have definitely edited this bit with great finesse. So you definitely see Keshav and Nityananda on your screen right about now.
Yeah, but not in the way like Nityananda consoles people. Not
Nobody
in
can
that way.
console like him, Keshav.
Yes.
Keshav, an ardent follower of Nityananda. I forgot to mention
Yes.
that. You are?
No, sir. No, sir.
Anyway, enough humor, enough fun. Thanks for watching this video. I hope you enjoyed it. Hope you had a lovely Sunday and you're ready to get back into your work on Monday. And we'll see you in the next one with Anand. Bye.
Thank you.